So welcome everybody, we're back here together, AdviseRE here. I'm Stefan Morris.
And I'm Diana Tung.
Today we're going to be talking a bit about S-Corps, because I know this is a very exciting business form for all of you guys out there, and I know you've heard about the tremendous tax benefits that you can get out of it. But we're going to talk a little bit about what it takes to run an S-Corp, what are the implications, what are the compliance considerations, as well as what the tax benefits are and why those tax benefits actually exist. Okay, Diana, so tell me, what are some of the ways we can get an S-Corp started? What are the legal considerations? What type of entities are available to be an S-Corp? And how do you even get that whole process started? Is S-Corp, is that like a legal concept?
Basically, an S-Corp is truly a tax designation, okay? And so when you think about kind of a legal entity, you might think, okay, I'm gonna incorporate a corporation, I'm gonna set up an LLC. Those are legal entities, right? But an S-Corp is something that you elect to be with the IRS. And so you have to file Form 2553 and basically tell the IRS, hey, you know what, even though I have, this legal entity, it's an LLC, it's a corporation, I want to be treated and taxed as kind of this pass-through entity and an S-Corp.
Give me some clarification on what type of entities are actually eligible for an S-Corp. What is the difference between them, at least from a tax perspective?
A corporation, typically from a tax perspective, is like a separate legal entity, right? And so when you're thinking about, the tax implications of a corporation, you're kind of looking at a double tax. The corporation is its own separate entity, and then, you own an entity, and so there's a tax that kind of applies to that corporation. Now, an LLC, it starts to get a little bit funky because, an LLC can be taxed as a corporation, or it could be taxed as, a pass-through entity, right? And so when you have this S-Corp election, it's also taxed as a pass-through entity. It kind of retains the corporate structure of the entity, right? And so it's still technically a corporation, therefore S-Corp. The only difference is it's getting taxed as a pass-through entity. And so there's no taxation that occurs at that level, at least for federal purposes. But all of that income or losses or whatever happens in that business entity ends up getting passed through to the shareholders of the S corporation.
Great, so let's talk a little bit about that. Why do we even file a tax return for an S-Corp? If there's no tax due, as you're telling me right now, the S-Corp's not paying taxes, then why do we even send something to the government and say, hey, you're ready to collect zero tax from us here?
I mean, why do you file a tax return for a partnership? There's no tax there either, right? There's a ton of tax forms out there where you have to file them. They're informational only. From the IRS's perspective, they want to know what's going on. You could be paying no tax, but they need to know kind of what's happening, what your income is, what your expenses are, and all of those details, so that once it gets passed through to you, you kind of have a K-1 that's issued to you through that S corporation.
Got it. Okay, that makes perfect sense. So let's talk a little about the K-1 then. The income that flows from the S-Corp to the individual. Tell us about the character of that. Okay, the S corporation makes $1 million in a year, for example. What does that K-1 look like, and what are the tax implications of that K-1 to the individual shareholder?
So typically, when you're receiving a K-1, this income is going to come through as ordinary income to the shareholder, right? It's going to come through on your Schedule E, and then any losses you'll be able to take against, let's just say you have W-2 income, you might be able to take those losses against your W-2 income as well.
Okay, great. And that income surely has some sort of tax attribute that everyone loves about S-Corps. What is that? What is so special about S-Corp income that is very different from just the traditional Schedule C filer who's doing his or her own business tax returns?
So one of the biggest things that people always get surprised by when they start kind of their own side hustle is the self-employment tax. And so self-employment tax, typically if you're employed by your employer is actually paying half of that self-employment tax. Well, guess what? When you're your own employer, you are paying your self-employment tax. And so that's actually something that people get hit with and they don't expect when they have their own kind of sole prop, their own business that's coming through on a Schedule C. But When you have an S corporation, one thing is you have to make sure that you pay yourself a reasonable wage. How you determine that can kind of vary based off of what industry you're in, what type of work that you're doing. You might want to look up, what a reasonable wage is. Outside of that, that income is coming through to you without kind of the taint of having to pay self-employment tax. So that reasonable wage that you're paying yourself, you're kind of stepping in two shoes here. You're an employer and an employee of your own business. And so the employee side, whatever reasonable wage you're paying yourself, there is a concept of you're paying that, self-employment tax and payroll tax. But everything else is just kind of gravy on top.
Yeah, so when we're talking about self-employment taxes, to be clear, we're talking about Social Security and Medicare. And I think most people are used to the employee, when they have a job, the employer pays half, you pay half, and you're no longer responsible. But when you get that double hit, it can be quite a bit. And you're talking about 15.3% of up to the first I think now it's $168,000 in 2024. So it can add up to be quite a bit of taxes. So it's a really substantial tax savings, at least from an S-Corp. But I think, you brought up a good point about paying yourself as a payroll. Although S-Corps are wonderful in terms of tax savings, there's a lot of compliance you got to do as well. You got to do a lot of work. Do you need books and records now? Do you have to maintain books, or can you just fill out a profit and loss on your Schedule C?
So, we go through this all the time with our clients, and it's kind of does it make sense for you to start an S-Corp? Because there are costs to it, right? Because you are going to have your own set of books and records. Obviously with another business entity and a corporation, you're going to have minutes annually that you'll have to, record as well, right? So there's, some compliance there, there's some requirements there. Also, from the perspective of, do you have to pay yourself a reasonable wage? So now you're going to have to run payroll as well. And so those are all kind of added costs that come into play, right? And so oftentimes we'll do an analysis for our clients to see at what threshold does it really make sense to start, making that S-Corp election.
What threshold do you typically see as a rule of thumb? Obviously, everyone's situation is different, but around what income level, or I should say net income level on their business, what is a good threshold for people to start considering, hey, you know what, I really should start digging into converting my business into an S-Corp?
So I think typically we're going to see once you're hitting about 75 to kind of the six-figure mark, then you're kind of going to want to say, hey, let's start to take a look at the numbers, because in addition to the payroll, to having, to keep books and records, obviously there's going to be a tax return to file as well, right? And so those are definitely all things.
Yep, you got to pay us too to do the work, just so you know. Okay, we'll be here for that. Okay, so thank you so much for all of that. Okay, that's the type of information I think that we all need to relay to you guys here, because when you're thinking about whether or not to get an S-Corp, there are huge benefits, but there are also some costs associated with it as well. We highly recommend it to all of our clients, especially as you start getting to past the $75,000 a year mark or so. You're starting to be on your path towards realizing some pretty tremendous tax savings as well. So I hope today this discussion at least gives you a little bit of clarity and guidance on what it takes to run an S-Corp, what are the tax advantages, how to incorporate one, whether the form's required to get there, and also what are the costs associated with it, how much work additionally you'll have to handle, as much as paying fees and taking care of payroll services and handling books and paying your tax preparers as well. All these things are also going to be huge considerations as to whether or not you decide to ultimately start your journey into the S-Corp realm. So thank you so much for joining, and we look forward to seeing you in our next video.